Coming up on Market to Market. Wildfires cross a grim threshold in California. Rain brings relief in drought areas, but it may be too little too late. Finding new ways to coexist with a returning predator. And market analysis with Dan Hueber next.
From other parts of the world.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. This is the Friday, September 11 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. We are 19 years past the attacks of 9/11, and the day still evokes a remembrance of where we were that day, how the world has changed, and yet remains the same. Just like in 2001, firefighters are still charging into burning buildings, or, as in the western states of today, forests to save lives and property. More than a dozen people have died so far. Damage totals across Oregon, Washington, and California have quickly risen into the billions of dollars as crews keep fighting. John Torpy has more on the challenges of dry conditions across the country.
Any progress in the West to contain existing wildfires received a setback this week as several mostly contained blazes were reignited and new fires joined the fray. The August Complex Fire, the largest in California history, sprang to life in mid-August after the forest was hammered by thousands of lightning strikes. The blaze has consumed nearly 736 square miles, due in part to dry winds blowing across the area north of San Francisco. The newcomer to the Golden State's worst wildfire season is the Creek Fire, which in only 5 days charred 175,000 acres just east of Fresno, California. So far this year, wildfires have burned almost 5,000 square miles in the state. Officials in Oregon and Washington are using the word unprecedented to describe the numerous wildfires burning in those states. Over 1,400 square miles in Oregon have burned, and more than 500,000 people were forced to evacuate to safety. The U.S. Forest Service reports they are currently battling 85 uncontained large fires in the western United States. Rain and humid conditions brought relief to some drought-stricken parts of the country. According to the National Weather Service, the Corn Belt received anywhere from 2 to 8 inches of rain over the past week, easing ground moisture deficits in many areas. The U.S. Drought Monitor reveals extremely dry conditions have eased slightly in the Midwest and the Rockies. But the rain's timing is too little too late to help drought-damaged crops. Officials with Iowa State University say the moisture could promote plant diseases and mold growth in drought-dormant crops, while the rainy conditions may put a damper on harvest. For Market to Market, I'm John Torpy.
We paid a little more for goods and services last month, but the jump was a little lower than July. The price paid by producers for the goods and services we buy rose only 0.3% last month, half of July's increase. That decline was reflected in the Consumer Price Index, with both the CPI and core CPI rising the same 0.4%. These final figures also were slightly lower than July's numbers. A few generations ago, the management of wildlife included offering cash bounties for predators. In the past few decades, the near extinction of one of those native species has grabbed some attention. Colleen Bradford-Krantz has more in our cover story.
Once upon a time, there were two groups of predators who constantly fought over the same prey. They battled one another for generations until, finally, one pushed the other out. Over time, the winning predators began to miss their enemy. Some helped their former rivals return to the once contested forest and fields. And now, it only remains to be seen if they can live side by side.
While it may not read like an old storybook, Michigan wildlife biologist Brian Roll keeps a list on his computer of important wolf dates.
We actually, throughout the early 1900s, killed every wolf you see. They were a bounty animal. All the way up to 1956, we felt there was probably fewer than 100 wolves in the Upper Peninsula. And just 4 years later, the whole bounty was actually removed from the state of Michigan.
By the end of the 1960s, gray wolves had all but disappeared from the region, with one small pocket remaining in northeast Minnesota's Iron Range. In 1966, wolves were listed under the precursor to the Endangered Species Act.
As things changed, both ecologically and socially, people started to realize that predators were an important part of an ecosystem.
By the 1980s, wolf populations began to rebound across Minnesota, Wisconsin, and Michigan. Roll says exceeding planned population goals should have resulted in wolves being removed from the endangered species list. Instead, a series of administrative changes in answering lawsuits have meant the wolf status on the list in Michigan has whipsawed, changing 7 times in an 11-year period.
So it's been this yo-yo movement that I don't think has helped wolves. All it does is build this animosity that we can't do anything. We can't protect our own livestock. We can't protect our pets.
Roll says when those lawsuits succeed, the rare wolf found hunting lambs or calves can only be dealt with through non-lethal means. Nearly all of those measures eventually stop being effective.
If we could empower the farmer to do some of that work, it grants wolves, some approval rating that I can deal with that. But when they're this hands-off that even though they're killing cattle, I'm not allowed to kill that wolf, that creates the animosity. And what they do is they tell their neighbor tells their buddy, and then it just snowballs. And so people have this belief that, wolves are rampantly killing livestock, which isn't the case.
250 miles away in Minnesota, wolf numbers are climbing and territory is expanding. The state estimates the wolf population now numbers more than 2,800, about 2/3 of the total in the western Great Lakes region. One research team is getting up close and personal in Voyageurs National Park, near International Falls, Minnesota. Their trail camera footage has helped draw attention to the wolves' gradual return. Unlike in Michigan and Wisconsin, wolves in Minnesota are listed as threatened rather than endangered. This allows government officials to use the last resort option of killing a wolf known to be causing repeated problems with livestock.
When wolves are causing problems by eating sheep or eating cattle or hunting dogs or pets, which they've been documented to do, no one wins, right? It's a problem for the owners of those animals. It can be an economic problem. Wolves don't win because often USDA Wildlife Services will come in and trap and lethally remove wolves as well to mitigate that conflict. So I think everyone has a shared interest to minimize that.
Wildlife experts have a range of non-lethal options, including guard animals such as dogs, donkeys, and llamas. If those fail, streamers, lights, and alarms could be used to frighten wolves. But none of these work every time.
You have folks who raise livestock who think the only good wolf is a dead wolf, and you have folks who absolutely enjoy and are thrilled by wolves on the landscape where they're operating.
Cattle producer Keith Carlson is learning to coexist with the wolves, which have returned to his Sandstone, Minnesota farm, about an hour south of Duluth.
As a youngster growing up, if we ever heard of or seen a wolf, it was very, very rare. It was probably in the past 20 years or less that we've started to have to deal with wolves that are in this area. There's many producers or ranchers throughout this area that have had wolf problems within the past 10 years. It seems to have gotten even worse.
Carlson says the challenges are offset a bit by government reimbursement for livestock killed by wolves. However, the evidence must be clear that a wolf was responsible.
Last summer on our ranch, we had 5 confirmed wolf kills, and I'm saying we had 8, but we couldn't prove the other 3. But we do have agencies that work well with us help verify that it was a wolf kill.
Carlson says Midwest residents are being misled when a population goal is met but doesn't result in delisting.
They all came to an agreement, which that's kind of what's frustrating for us.
To me, it opens up attacking the whole Endangered Species Act. And I certainly don't want to see major changes made to the Endangered Species Act because of one species. When you look at wolves in Minnesota, Wisconsin, and Michigan, it should be a celebration of the Endangered Species Act, not used as a tool to keep them perpetually on the list.
For Market to Market, I'm Colleen Bradford Krantz.
Next, the Market to Market report.
A single case of African swine fever found in a wild boar in eastern Germany rippled across the world pork market late week as another highly anticipated USDA report day had less dramatic effect on the trade. For the week, December wheat fell 8 cents while the nearby corn contract gained a dime. The soybean complex gained more spec fund moves to the long side of the ledger, while Chinese demand kept the market on a roll upward. The November soybean contract improved another 28 cents. December soybean meal added $7.40 per ton. December cotton contracted by 18 cents per hundredweight. In the dairy parlor, October Class 3 milk futures rallied 31 cents, a green week. In the livestock sector, October cattle increased $1.08. October feeders added $2.08, and the October lean hog contract jumped $6.75 or 11%. In the currency markets, the U.S. dollar index rose 60 ticks. October crude oil declined $2.41 per barrel. COMEX gold gained $6.50 per ounce, and the Goldman Sachs commodity index fell 11 points to finish at 336.75. Joining us now to give us some insight is one of our regular market analysts, Dan Hueber. Hello, Dan.
Hello.
It's good to have.
How are you today?
Good to have Mr. Huber's neighborhood here. We had the word of gov. Was there any impact today on the wheat market?
Well, the wheat market acted as you would expect with a report like we had. Granted, there was nothing dramatic that came out of the wheat, but it was a reminder that wheat stocks globally are at record levels, and probably is going to be difficult to really accelerate prices from here. Granted, with the discrepancy in the corn market rallying, is probably going to encourage a little more wheat feeding around the world. But outside of that, boy, the wheat market just does not have much of a story to even sustain these prices, or certainly move much higher from here.
I think at one point this week we had 5 consecutive lower days. So is this a corrective bounce or a trend?
I think we're into the early stages of a corrective break. We had broken down early in the week, did snap back a little bit from there, but I think, again, today's reaction probably brought things back into reality again. So it's, like I say, I think with the week's just got so many things stacked against it fundamentally. It's been a great rally. It's been a great move up this year. I think surprised a lot of people already, but to make that extend from here, we'd have to have some kind of a real problem. And, you've had some rains in Argentina, improved the conditions maybe a little bit down there. Australia looks like it's off to a great start for the year. So, again, pretty difficult to paint a very positive story here in the wheat market right now.
So are you selling before you drop any lower?
Well, I think so. I think you want to play defense in the wheat at this point in time. So it's,
okay.
Again, I think keep in mind, I think commodities as a whole do have a little better pictures. We start looking out into next year, but at this point, wheat's probably going to be the trailer, not the leader, any of these advances.
A dime on corn, Dan, and that was pre-report. Mm-hmm. Then we added a little bit more, but market didn't respond. What did you think about the corn number from USDA?
Well, the corn number I think was reasonable, in both in taking the yield down and in taking the harvested acreage number down, which again, both of those were well anticipated by the trade. But also, I think this is a little bit of a wake up call that yes, we've had some problems around the globe. We know China has really stepped up their demand and will probably continue to be a very good buyer of corn here as we move into the months ahead. And we don't know if this is the last of the reductions, as far as we don't truly know what some of the damages were in Iowa, especially from the storms here last month. So you're not that we're going to get carried away on the upside. I think as you start pushing December futures up into this upper 360 to a 370 range, you're going to meet a lot of resistance. And, let's not forget, you look out into next year, you've got the December 2021 crop, not that far below $4 a bushel here at this point. So, it's going to be probably met with some farm selling and resistance that way. Yes, the funds have kind of reversed course. We've got them on the long side of the corn market, but here again too, I think we have probably a limited capacity to move that significantly higher from where we stand.
So over 4 is not really something you see in the future for that December contract?
I don't believe so. I think if we can challenge 375 to 380, we've probably done about the best we can here at this point in time of the year.
So if we get towards 375, 380, so not much more than 6-8 cents, it's time to cash in a little?
Pull the trigger. I believe so. I believe so. It's particularly with harvest right in front of us.
All right, so I'm not 100% on my Bible here. I think it was in the bean trade, you work for 12 days, rest on the 13th. Do I have that right? And then on the 14th day, we put in another rally. I mean, the bean market was really on a run. Is this got more legs to it?
It potentially could. We know that, when you get on a roll, you have to have momentum behind us. Funds have been very active buyers in the beans here for the last several weeks. I think as of the commitment of traders report this afternoon, I think you've got the managed money along 170-some thousand contracts. So, it's a lot easier or a lot more savvy to add to a winning position than a losing position. So, again, you've got the momentum behind it. Here again, that said, we are pushing, rallying against that $10 area. If you look even at the November contract, the entire range over the last several years, halfway back is right at this $10 mark. So, yes, China has been a substantial buyer and probably will continue. But, even before today, this market was just starting to act just a little bit weary. It was more grudgingly moving higher, although moving higher. So, here again, too, when I look at that soybean market, with the $10 steering us here, I think it's going to be difficult to really extend it a lot further than this with harvest in front of us.
So you see us touching over 10. How far into 10?
On the November contract, I think 10, right in that neck of the woods is going to be a very difficult area to get through. So it's, and again, I have already been suggesting if we push up against that area, this is a good time to make sales. For many people, that's a 950 bean walking out of the field or better. So those are profitable levels if you've got a decent yield of beans out there.
Last question on beans, and this is hard to say, but are you worried that there doesn't seem to be necessarily fundamental news other than some China buying that's pushing this? Are you afraid, and we'll get into it now. In fact, let's just do Aaron's question now. He's asking why the 20-cent bean rally. Report was slightly bearish to expectations, and the fund's already so long. So where's the price going once the combines roll? And this is what triggered the thought. Might be an escalator up and an elevator shaft down. Are you concerned about an elevator shaft down?
Not really an elevator shaft down. No, I mean, I think a correction would probably be in order. But, but even taking the report, yes, the numbers as far as yield, as far as production, were right at maybe just a touch higher than what the trade was anticipating. That said, we're really predicating the next year on not only a decent crop here. I mean, that was still a record or close to a record bean yield that the USDA had predicted, but also, they've upped the Brazilian yield for this coming year, the Brazilian production of the 2 million metric tons. So everybody's counting on a record Brazilian production for this coming season. And with La Nina in the cards, that could, bring a few concerns out there. We're not saying that necessarily will turn into a problem, but, the world definitely is counting on that Brazilian crop to be a record again. So, yes, there's a lot of question marks that are going to be remained unanswered for the next several months. And as long as China remains in there as a buyer, and for all intents and purposes, as they try to rebuild their hog and poultry herds, they're going to be strong buyers on the feed grains. So.
The hog market. We need to talk about that a little out of order from the meats.
Yes.
You have the case of African swine fever
excitement.
and wild boar in Germany. South Korea says, hold on the German imports. You know that's going to ripple across the world.
Sure,
What's that? I mean, we've gone limit up 2 days in a row. Do we have a third when this flips over to Monday?
Well, I think even today you already started to see the market lose a little bit of that enthusiasm. Yes, we could turn higher. I mean, there's often an old theory that you'll gap 3 times until you reach a top. So yes, if we did happen to leap higher again on Monday, that's probably a pretty good indication that we're exhausting. But even that said, yes, Germany has really stepped up their exports this year because of the African swine fever in China. Not that couldn't shift a little bit more demand into the U.S. We could really stand to pick it up. I mean, through the end of July, we were still running behind a year ago levels on our total exports on pork and beef. So it's restoring some profitability to the hog market. And I even look out in the next year. I mean, you've pushed some of those summer months out in the next year into the 80-cent range. So it's really taken this up into levels that for the last number of years have said this is where you really want to start pricing and lock in some values for. And boy, after what we've experienced over the last 2 years in the hog market, a very welcome change of pace for what we've grown used to here.
I think hogs in the neighborhood of $11 over a 2-week period. So do you think the bottom is in? Is that safe to say?
Well, I think yes. I mean, we probably printed bottoms in just about all of these commodities at this point in time. That said, when you look at the values we moved up in here too, there's also going to start becoming some price resistance. Not only domestically but on the international market.
Okay, live cattle. Who's buying right now? Where's this interest coming from? Anyone?
Yeah, well, I mean, good question. I mean, I think the general, just across the board. I mean, the people have, I think, have felt a little more comfortable, even though we're kind of beyond the summer barbecue season. We've felt a little more comfortable. The economy's turning around. We're spending a little bit more money for some higher priced meats. And you've had some restaurant trade turn around and open back up. We know that has been a big void in the meat consumption this year. So I think that as people go out to eat again, we're tending to see a little more beef consumption. So.
Was there a little bit of a maybe carryover late week, Thursday, Friday, because of the hog situation?
Oh, certainly. They're all going to bleed off of each other, and that probably even lifted the feeder cattle market back up a little bit, which has been on somewhat of a correction. But that's been probably more of a seasonal trade than anything else to the downside.
All right. Are you selling anything right now in cattle?
Well, here again too. I think when you look out, anything in the fronts at 110 or better, and then you get to those summer months at 140. Absolutely. I think it's those are usually pretty good numbers. If you've got a good margin on what you've got on the lot right now, there's no reason not to be locking that in.
The feeder story remains the same. We keep putting some weight on. We keep moving into the lots. Gained $2 this week, more than $2. Are you selling in the feeder market?
Well, I think the feeder market probably has a little more room to run to the upside. I think most of the break, yes, has been more of a seasonal by nature. Plus, it coincided directly with when the corn market turned higher. Probably at least psychologically thinking that's going to back up the feeder demand. But I think right now it's probably getting, and again, by no means a runaway to the upside, but I think we could have another week or so of a little bit of strength, or at least corrective strength in the feeders right now.
For how much longer? I mean, is this a month, a 2-month thing, rest of 2020?
I would probably tend, and you're talking about feeder cattle again?
Yeah, feeders, yes.
Yeah, I would think sometime between now and the 1st of October.
Okay. So a short window.
Yeah.
All right.
Very short window, right.
Okay. Right. Real quickly before we finish, cotton. Kind of the same question that I had for live cattle. Who's buying this right now?
Sure. Boy, and again, I guess I haven't looked really into the background of the cotton. I mean, it doesn't seem to have any, even today, none of the news was earth-shattering. It wasn't negative. It wasn't positive. but we have tended to turn it up. And I think, part of that is based on seeing the world's economy open back up, and see a few more people maybe even start wearing dress shirts again, using cotton for the products that are out there. So but I mean, it's been a long run. It's been a good run. I've been kind of looking for the cotton market to falter and push to the downside. And boy, each day, every time we seem to push against that bottom area where you think it's really going to fall apart, we snap back again. So I've been quite impressed that we've been able to hold on as long as we have this time.
All right, I can tell you where the cotton market's going. I needed another hooded sweatshirt. It got cold this week. I know that's where it's going to go. Dan Hueber, thank you so very much. Appreciate it. That will do it for this installment of Market to Market. We will talk more in Market Plus, so you can join us there. Find that on our website. Here it is, markettomarket.org. And I have a little secret for you. Well, okay, it's not. The secret's out. Our YouTube channel is booming with full videos of our stories, our program, and that show we call Market Plus. Subscribe now at youtube.com/market-to-market. Next week, we'll look at how dredging is making way for more commerce on the lower Mississippi River. Until then, thanks for watching and have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.